A very good evening, everyone. Welcome to Admiral Markets. My name is Chris, and Neneth and I are going to present our webinar here on the 2016 trends that we are expecting, and it's going to be, I think, an interesting look and perspective on the market. We're also going to take a look at what we said last year and how accurate we were about that, like we did the last two times, I think, already. This is the third or fourth one in the meantime. Before we take a look at our forecasts, past and future, be aware though that this webinar is intended for a global audience. It may not be suitable for everyone, so take a look at the link here, admiralmarketsglobal.com. Select your country of residence and contact the appropriate entity to find out more if it's suitable for you and other conditions and details. Also, I would like to ask you if the sound is working properly. If you could write how the audio is working, that would be great. Furthermore, trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer, plus you're aware of the risk involved when trading. All right, with formalities out of the way, before we kick off the webinar, please take a look at MT4 Supreme Edition. There are a lot of good reasons to trade with this extra feature for MT4. There are tons of extra things. You can find out 6 new reasons why you need remarkable MT4 Supreme. And here are the features of the new features. There have been 6 newly added ones. If you're curious about that, you can find that in the link right here. And I'll send that in the chat so you can take a look. Alrighty. So today's topic. Great, sound is working. Thank you so much. We're going to take a look. Flashback last year. Well, the market was hanging around 120ish right here, and at the end of 2014, and had already, of course, gone through a major down trend all the way down from 140. So about 2,000 pips. What for a euro dollar is pretty much a solid downtrend, as you can see here. And it was a break of a rising wedge earlier, a year ago, already talking about the rising wedge in an E formation triangle after this is considered to be the D part, the C part, the, let's see, I'm getting it mixed up. Yeah, the B here and the A here. Yes, that's it. All right. So that indeed happened. We got the break. That was last year. And we just got the continuation of that momentum at the beginning of this year. Now, I personally, at the end of last year, thought we would get a bit of a retracement, in fact, maybe up to this zone before following through to parity. My goal was parity at that time. So we didn't quite get there. I actually had a couple of bets I made with traders, and one of them said 115 at the time, one had 110, one had 107. I had parity. Now, actually, the person who won was 107.50, funny enough, because they were off, that person was off 300 pips. I was up 450. So technically, 107.50 was a closer bet than 1000, what I had. So unfortunately, I lost that one. But I think that you still get the spirit of the idea that it did move down a lot. Didn't get quite close, didn't really get to parity, but ultimately from 120 did move down, still at 1550 pips. From that point of view, maybe not bad. And so from that point of view, we did see the down continuation. Then we had about 9 months of consolidation, really, right? Even the recent downside did not break this bottom so far, and price really kind of ranging pretty tightly. Some continuation in November here, but already getting a bounce in December. So it didn't really continue that much, just went flat. So that was last year and the last years, in fact. All right, how about next year? Well, personally, I'm not expecting a break this month, and I've been saying that already since I think October, that it's going to take a couple of months extra, and it's not going to happen this year. I did say though that an interest rate hike, you never know. It could be a news event that could be a catalyst for a substantial move. It's always possible. Although I didn't expect it, with such an event, you obviously it's always a bit of a question mark. My understanding, though, was that if it didn't break in September or October, if it didn't break this bottom, to be specific, then this particular momentum that we had on the monthly chart was over. Using my time factor rule, I consider that a momentum over, which means that there's a high chance that we'll get a decent consolidation of about a year. So from that point of view, when price was approaching the bottom last month, I was curious if it was going to break, but I didn't expect it for my time factor analysis. And it looks like so far, despite the rate hike, price fell down to 108.50, but it wasn't a massively bearish day yesterday. It wasn't this 500 pip downside day. By far not. It was way off that. It was a bearish day, a lot of volatility with the rate hike decision, but no way near a 5, 6, 7, 400 pip down day, 300 pip down day. No. Didn't even get close to 104.50, the bottom, and this year's low. So not really substantial momentum. There was downside momentum, not overwhelming though, not enough for me to say in the next 2 weeks this bottom is going to break. So from that point of view, I think what I've been saying the last few months is going to be hold true. Probably, you never know in Forex, but probably. And I think that we're going to get something like this. A couple of blue candles like this, basically kind of like a a bear flag correction. I'm going to expect the break to happen next year. And my guess, and this is of course difficult, but probably April, if I had to make a guess. And we'll see sometime next year some engulfing monthly twins like this, pushing right at the low or maybe breaking through it. That's going to be the acceleration signal for another bigger month, in fact. All right, then we'll probably get a couple of months that are smaller like this, and then we'll see maybe some correction like this. All right, now what is that low going to be? I think we're going to go at least to parity, but I think we might drop a big figure below that and go down to 09 in my opinion. Maybe even 085 and this minus 61.8 target, but not probably much below that because we have bottoms here. All right, so that's my forecast. I think small candles, small corrections, slight to the upside, engulfing twins, big candles, smaller candles but downside, and then a correction for the rest of the year, ending up maybe back at 095, for instance, closing the year at 095 after a low of 09, for instance, something like that. That's what I'm expecting. Well, so let's see. We would in that case have momentum here. We would have had the triangle like this, and it would have been a break, consolidation, break. Right? Do you see it? Break, boom, and then a hook back like this probably. All right, so that's my 2 cents on the euro dollar. More dollar strength, but I don't think now, but I do think next year, probably April, with a lot of space to the downside, I would say. Of course, a lot of that has to do with not only technicals, although I think with wave technical analysis, we can do a lot, and many of these forecasts are really purely or mainly based on that. But obviously, we can look at fundamentals too. So before we look at other pairs, maybe a word or two, a few graphs about the dollar. The dollar strength, of course, very apparent in the last, well, what is it? 2 years now in the meantime? Hang on. It started here in 2014. Yeah, almost 2 years. So there was a research done on the fund manager survey. What do you think is currently the most crowded trade? Look at that dollar here. Way above anything else, right? Anything else. Nothing comes near. Could have been maybe already a reason to think about the dollar maybe not able to push for a new high and not able to break the euro dollar bottom, right? Maybe, right? Maybe not enough market willingness to and not enough space at the moment for that upside on the dollar if everyone thinks it's overcrowded. Could be a reason. On the right side, you see at this time, in which phase of the economic cycle would you think the global economy is? All right, the green is early, red is recession. I think that's pretty logical. Early cycle recession. So we have, of course, a lot of people saying recession back in the financial crisis, the Great Recession of 2008 and 9. Obviously, a lot of red. All right, then the green picking up quickly because people think it's early cycle. Oh, right. And then what happened here? Well, basically, the thick line is a mid-cycle. Mid-cycle is really predominant since 2011. It's been controlling, let's say, the survey, right, for 4 or 5 years. What we're really seeing now is the late cycle catching up here. This thinner line is the late cycle, and it didn't challenge the mid cycle only somewhere here in 2011. So now it's doing that. So more and more fund managers are considering the fact that we're getting into the later cycle of the economy when looking at the global economy. So it could be a headwind. It could be a bit of a difficulty for not only the global economy, but obviously for the U.S. As well, perhaps. So how many rate hikes could we see? How many times could that rate hike go up? We had one this year, the very tail end of this year. How many could we see next year? Of course, that could be very important to understand how much dollar strength could we perhaps see. So what about that? What do people think about that? Well, in the right lower corner, you see how many hikes do you think the Fed will enact over the next 12 months? Right in here. And the majority thinks 3. Most think 3. We already had 1, so 2 left. A lot of them think 2, which means 1 left. Some think 4, which means 3 left. And a majority say 1, which already happened, and 5, and none, which is already incorrect. So I count myself to the 1 or 2 group, personally. Let's see. I don't know what you think. What do you think? How many rate hikes do you think over the next 12 months? Of course, we have the hindsight of benefit that we know that one happened, but still, how many do you think will happen? I don't see it personally going above 1%, especially with the global economy indeed having some substantial difficulties. I think if you look at Europe, China, it's not an easy situation for the U.S. to grow out of that. Obviously, typically, U.S. takes the lead in economic recoveries. The rest of the world follows. But will it happen again? Will it happen like usual? Is there maybe a different environment going on that makes that different? Is the U.S. recovery slower? Yes, it actually is. The U.S. recovery, I think I read somewhere now, unfortunately I forgot, was the slowest ever since I think back in the 30s. But I'm not 100% sure. I wish I remembered, but it was one of the slower ones in any case. So if the U.S. is already slowing, picking up that recovery on that slow beat, maybe what could happen is that it picks up max to 1%, and who knows, the interest rate on the U.S. can already maybe go down again, and we'll get a double bottom at near 0% before maybe 5 to 6 years from now it goes up again. Don't forget that in Japan it has been at near zero rates for 20 years, I think, in the meantime. They've had moments where they raised it, I think close to 1%, but boom, went back down pretty fast. Will the US experience the same? No one knows. Obviously, if you look at the Fed, they have it up at 4% somewhere around 2019. I don't know. I think it's over optimistic, but I'm definitely not an expert in fundamental analysis. I like technicals, but it's going to be very interesting to say the least. Anything up to 1% I can imagine, and much above 1.5, it's really difficult for me to imagine. But let's see. Maybe we'll be surprised, and everything will not turn out to be that bad. But if there is any consideration of big risks, it's Chinese recession according to this global fund manager survey once again. Chinese recession, the biggest one. Geopolitical crisis, and the European debt crisis. Those are the top 3, let's say, difficulties in global growth. All right. And then on the left lower corner, what do you think the Chinese real economy will evolve over the next 12 months? And it's not looking that great. So let's take a look at some other pairs in the meantime. Let's see, I got Ron saying 1 or 2. By the way, regarding the rate hikes, that's also in line with what I have. Anyone else? Anyone diverge? Let's see, depending on economic evolution, Claudia says 2, max 3. Yeah, economy is still fragile, as Hayden says. Do you ever watch the Kaiser report? I'm not sure. Maybe I have seen it. It's a lot of, must admit that there are numerous reports that do cross my PC, and I'm not sure. Maybe I did see it. What is it about? Ilya is asking if I would recommend to open a US dollar account on Apple Markets. Well, that's really obviously there's from a trading perspective, all these majors are fine. If you're thinking about gaining on the dollar because the dollar might strengthen, obviously that's a trading decision. I mean, like a trade, almost like a trade decision. And obviously, from my perspective, if I look at my analysis, I think that's a good thing. I think that the dollar will strengthen. I myself actually have a dollar account at this moment with Admiral Market. So, but that is analysis perspective that is, of course, obviously your decision. But from my perspective, it makes sense. Um, you can get it on RT. Okay, cool. I'll take a look. But I have to write it down, otherwise I'll forget that. 1 second. RT.com. Okay, cool. So, what is this pair? This is the pound dollar. So, last year I was saying that I'm expecting downtrend continuation, but I do expect to bounce up. Now, I had the fib differently. I must have had it probably at this low, but obviously I moved it to where the bounce happened, and we got a bounce here, but it didn't really retrace deep, and then we got a second one here. So this is really the swing high, swing low, ultimately, and price did move back to the 50 fib. All right, so I think roughly okay. Maybe the timing a bit off here, but I think not a bad forecast. The 50 fib indeed providing the bounce. Now the idea behind it was that contrary to the euro dollar, which is in a 5 wave to the downside according to wave analysis, and this is a wave 4 consolidation. What's happening, in my opinion, the pound is not in such a structure and it's probably in an ABC. And a B wave goes deeper, goes to the 50 to 61.8. That was the idea behind the fact that it would retrace deeper versus the euro dollar that should normally respect the 38.2 fib max 50. So that was the idea, at least. Now we did get the downtrend continuation, but this has been relatively choppy here, right? We do see it move down with like a lot of ups and downs. So either it's going to break the bottom and really start accelerating lower, or if it doesn't, it could break the channel to the upside and correct maybe a bit higher, even to the 61.8 before falling down to the target perhaps, right? Well, anyhow, I'm now speaking ahead of my turn. This is the chart actually I should show you. So a lot of trend lines here. Let's talk about, we got a bottom here in play. We got a support line, potentially only 2 hits, but still, we got a small little channel going on here. So what I'm anticipating, if I had to make my best estimate here, is I would say downside on the pound USD as it approaches the trend line at the bottom, but it's not going to break that bottom. I think we're going to get a bounce up. We're going to get a bounce up within that channel still to the top of the channel, or even to this trend line before the pound falls down to the target and bounces off the bottom and this support trend line. All right, so follow the arrows here. Downside, the beginning of this year, a bit, not too much before we bump into the support, the trend line at the bottom here. I think that will generate some bounce. I'm not sure how much, slight or bigger, before downtrend continues and price falls down to the target. Those are the red arrows and the trend lines that I have here. Once price gets to the target, I'm expecting a big bounce, correction, and then a break of the established trend line in the meantime. I know it's looking pretty far ahead, but and a head and shoulders here, inverted head and shoulders at roughly double bottom. Obviously, looking many steps into the future could be probably a bit too much, but still, this is my estimate. Now that might happen. Some of this might happen 2017, to be honest, because if this is if this is 2000 end of 2015, then somewhere around here is probably end of 2016. So this could be two years, but depending on how fast things move, this is my best bet. Most important for I think first half of next year, obviously, is basically just like the euro dollar. I think consolidation before the downtrend here continues on the dollar. The uptrend continues on the dollar, right? So basically, this kind of up and down before we get a bigger down. I think that's, in my opinion, the kind of the most important part of it. So somewhere in that second quarter, I'm curious if we're going to see that downtrend continuation. That is what is my forecast. Forecast could be totally wrong, of course, and there's nothing I can do about it. Doesn't mean though that obviously there's no good trades on February next year to the downside and then the next week to the upside. Obviously, that's why we have live trading room webinars, and Nenet has this recap forecast on Mondays and stuff like that, because a lot of things happen even within all these bigger arrows. But from a forecast point of view, of course, this is what I'm kind of anticipating. All right, dollar yen. I'm thinking that this is a triangle at the moment. We've had, of course, a tremendous upside trend. This is one of those trends that I also forecasted. So sometimes it's kind of interesting to have forecasts because you kind of prepare yourself mentally for something that might happen. You have to always be on guard not to let it bias yourself too much. But yeah, this always helps. I've had forecasts that were correct with gold to the downside, the yen weakness, the dollar strength, Aussie weakness, and it's kind of like mentally prepare. I think it could be useful as long as you treat it properly as a heads up. Now the yen has weakened a lot. Here was the first part. This was the third part. Then we had a consolidation. Then we had another up consolidation, up consolidation, up. So do you see a pattern here? Well, I think from a wave perspective, we do a 1, 2, a 3, 4, and then a big wave 5 that consists of 1, 2, 3, 4, 5. That's my view, at least, on the wave. And why is that important? Because if wave 5 out of 5 could be the end. And I think it's a pretty neat how you see it here. Wave 2 and a wave 4 consolidation, a wave 2 and a wave 4 consolidation. And that's a pretty neat wave structure. Now, it doesn't mean that it has to break and correct with a bigger correction like this. No, because you can get extensions on waves, and that's why realistically I'm just keeping an eye on this resistance trend line. It's in a wedge at the moment. Keeping an eye on the horizontal as well. And if it struggles, it will probably struggle, but if it then breaks, small space to the target, if it breaks above the 272 target at 127.50, there is space up to 135, which is a big resistance and a target before it will bounce probably to the downside from there. Now, if it breaks through the channel, obviously that's a pretty interesting moment. It has been in a strong uptrend ever since the last 3 years. So if it breaks that, we can see it move down to the 38.2 fib at about 114. That could be a big correction. Obviously a big move potential there if the trend gets corrected. So I'm keeping an eye on both these trend lines. A pretty interesting wedge, long-term wedge here. And I don't have any preference here. I think it could go both ways. I am not going to make a forecast on that. I think it really has a lot to do with the Bank of Japan and its quantitative easing monetary policy. And I really think that just keeping an eye on these two trend lines is the best, because a break of one of these two trend lines has a decent chance of giving the indication of upward downside. Let's see. Someone mentioned a question. Someone mentioned that after a Fed rate hike, the Bank of England will follow and rise. Do you think so? I not in the near term. I think. I unfortunately don't remember the source anymore of this information, but As far as I remember, I don't know. I don't remember the source, unfortunately. Let's call them. They expected more of a rate hike, maybe end of next year or 2017. I think Bank of England could follow suit with behind the Fed, but maybe not very soon. Maybe not in the next half year. Would it be possible for you to set time horizon for a pound? Yeah. Time. Well, that's I think also same like the euro dollar. The fall I think will happen second quarter, probably maybe April would be my forecast. March, April. Timing is always difficult, but I think the pound will be about the same point of time. The fall, I think, could last a couple of months. I think 4 or 5 months into the summer, and maybe on the pound, make the last dip here in October, for instance, get a bit of a bounce up in November, something like that. I think this whole thing could take 2 years, so this is getting tricky here. The downside is the most important. All right, oh, sorry about that. I somehow. All right. Sorry, I forgot to talk about last year. Well, very shortly, last year, the price was here, and as far as I remember, this is incorrect. I meant up. Sorry about that. Um, from the slides, up because we had a lot of momentum here, and we did get a consolidation and continuation to the upside. I thought the 272 target, minus 272 target would be it, but we failed here to miss that, and we didn't get there quite to the target. But otherwise, indeed, uptrend continuation. Aussie expected downtrend and bounce up. Well, we got bounces at the minus 61.8 targets, but the bounces were shallower than I expected. So kind of semi right here. Otherwise, price pretty much continued with that downtrend as it already was bearish in 2012. No, sorry, 2013, 2014, and this year as well. 3 bearish years in a row. And the Aussie, I think, will follow the euro dollar too, probably. Could hit this resistance spot, fall down to the target, but then I wouldn't be surprised to see a pretty strong bounce because it's back at this bottom. And after so much downside, so many years of downside, to see a bit of a bigger correction here on the Aussie, I think could happen. So let's take a look here. Something like that. This is what, with arrows, you can see it. As I said, bounce up into the supply demand zone, probably likely then down to the target and then a bounce up. Or if it does break through this bottom, it could fall right away to the target. But this is a pretty sturdy bottom here. That could obviously be a big move, a big level to think about. All right, euro yen. I'm expecting euro weakness. So euro odd, euro New Zealand. I do think that the euro will lose ground against that. The pound, I'm not sure because the Aussie has also been weak. So pound odd, pound New Zealand might have lots of ups and downs, and I don't have really a strong forecast for that. But I think the euro yen will not make any drastic upside here. If it does, it's going to hit resistance trend lines, potential head and shoulders here. So I think that scope is limited before it moves down again. If it does break support, it could fall down into this zone here. I don't think the euro is really going to show lots of strength. I think it's going to remain weak next year. So um, really looking at keeping an eye on these trend lines basically for bounce spots. All right, so let's see what kind of trends we have. I think basically in general we can say that the market is expecting a continuation of low inflationary environment. We're going to have some global resistance. Let's say the U.S. could continue its growth just a bit, but if it's going to be enough to pull out the rest of the world, difficult to say. Most are not expecting a major recession or something like that, but it's not going to be lots of growth. There is one but. and that is the fact that if something starts to accelerate, if let's say bearishness in the economy starts to accelerate, a fall like that could happen quick. So maybe there's a chance that something like that happens, not that high, but if it starts to snowball, then the markets could maybe tumble fast. The stock market, if it starts to fall, it could fall fast. Maybe not very likely, a very major fall. Maybe the economy will not. There's not a high chance, or fund managers don't expect a high chance of a recession. But if it does start, it might go quick. Um, so that's something to keep an eye on. Now, let's see, your dollar, sure. Then I'll pass it on to Nene, see what he thinks. Could be totally different. Maybe it's the same. We'll find out soon. This is the euro dollar. So 2-3 months sideways, slight upside. Definitely this monthly candle is going to be important. If it's bullish like this, then I think it's another confirmation signal of what I was expecting already in October. And then engulfing twin somewhere March, April. Maybe not the engulfing twin in March, but probably downside in April. Bigger downside than it could be in May, the biggest candle after the engulfing twins, small candles, and then a correction. All right, so I'll pass it over to Neda now. Cheers. Let's see. Let me pass over this.
Thank you, Chris. Thanks for a great update. So, as you know, guys, today we had a good pound dollar trade. Basically, we were short, and that short was very fruitful. Now, the thing is about now medium term forecast. I think Gloria or someone asked about Bank of England when it will start to hike rates. As I explained in my interview with Forex Street last Monday, I can say that I can expect it maybe from it's always ungrateful to predict those things. But let's say from this perspective, if I were to predict some rate hikes, it definitely would be after the second quarter of 2016. So for the exact date, of course, no one knows that. But if we talk about general opinion, I think it could happen at second quarter of 2016. Now, as you know, Bank of England, the primary goal is to achieve CPI figure about 2%. Their monetary policy is strictly governed by CPI. It's a little bit different because when I read their monetary policy statement and their monetary policy goals, they definitely don't mention strictly unemployment and GDP. But GDP is linked to housing prices, and also unemployment is heavily linked to GDP. So I can just say that their primary goal is governed by CPI figure, and unless we see a CPI figure above 2%, there won't be any rate hike. Okay, so that from this perspective, that could be expected maybe in second quarter of 2016. We can see that CPI has been negative for this year. CPI is negative, no rate hike. That creates a pressure which we can see also on a technical chart here with GBP dollar, which has been really bearish for last I can say couple of months. And the thing is, the cycle will probably continue until some rate hike. There will be some ups and downs, and we can expect that, but definitely we could foresee that it might happen as soon as CPI is above 2%. Now, also I was explaining about terms of dollar-related crosses. The most vulnerable currency since greenback, definitely yen, euro, AUD, and CAD. The thing is that currencies which are linked to hard commodities and energy definitely seem to be getting weaker, and currencies which are definitely underpinned by quantitative easing measures. So in the basket of currencies, for the weakest currencies versus dollar are definitely yen, euro, AUD, and CAD. Yen is a reserve currency, and it usually appreciates during risk off, okay? And in between commodity prices, I would say CAD and AUD. Euro is, as you can see, vulnerable because quantitative easing seems finite in the near future, according to ECB. Okay, so that's my general opinion about current trends and trends which might continue further in 2016. Now, of course, you know that we don't do any long time forecasts, and I will cover major currencies now. I will tell you what could happen, but please, guys, do not treat it as session recap, because session recaps are like signals, like when you could enter where you should exit. This analysis is long-term. Do not treat it as that, and it's, you need to know that mid-term analysis to long-term is prone to various macroeconomical and world shakeouts. So we don't do any signals now. Okay, it's not like session recap where I give you the entry and target and you trade it. Now this is just a general opinion which can change. I always take a reserve with this, so this can change. It's not certain. Let's start with pound dollar. As I say, pound dollar CPI is below 2%. No rate hike at present. It should be coordinated with Fed. But as you know, I already predicted that Fed will go with step-to-step hike, which is good for the currency. So we need to see when next rate will happen, but it won't be good if next rate happens during next FOMC, and I don't expect it. So probably during quarter two there will be some hike. Until then, we need to watch for the patterns. Now we can see that there is some sort of a falling wedge here, guys, so we might see maybe also a rally to H3 and pivot point. What can happen is basically the price now is trapped in a bearish wedge, okay, in a bullish wedge. So this is still a bullish wedge, but we talk about daily time frame. Daily time frame is different, of course. I will unraid this trend line. Okay, so like this, and we have another trend line like this. So guys, this is definitely our falling wedge, right? Falling wedge is effectively a bullish pattern, so it could spike from a level. Now we can see that this L3 Camarilla pivot point didn't hold the price exactly. These are monthly pivot points, so what can happen is that price gets here at L4. L4 on Camarilla is a very strong level. It's a very strong support. If L4 is broken and the price closes below L4, we can expect a gradual grind towards L5. So what I think is that the price might come to L4. Okay, it might come to L4, then start to go upside. It's not that far away. It's like 120 pips from this price. Okay, it's 220 pips from the current price, but that can be achieved, right, very soon. So when it comes, if it does, pay attention to L4. Pay attention to this wedge, which is making an X cross at L4. So if it makes a jump, it probably will give you, I mean, I told you we won't be making any signals, but I cannot escape telling you such things. Well, pay attention to this level, definitely, okay? 47, 70, 80, so that is the level. If the price comes, we could see some bounce towards L3 again, and maybe the top of the wedge, okay? If it comes, we should be prepared for a possible bounce. But we cannot say that it definitely will happen. It just can happen. It's logical. Because this is bullish pattern, but you can see that the wedge isn't broken to the upside and the price is still falling down. So it has more room to go down than bounce up. If rate hike happens, I expect pound dollar to bounce towards, we can see weekly targets. Okay, on weekly even we can see that falling wedge is being developed. So in times of a possible hike, and if it happens down in this region, we will probably see a rally towards upper targets, ultimately 5500 and even more. But if we want to see H5 touched, first we need to break this bullish wedge, right? So pay attention to bullish wedge, pay attention to a possible breakout and a possible L4 touch and bounce. So this is midterm, okay? It can happen only when price hits L4. Until then, we might see some range up and down in between these two lines. Euro dollar, of course, euro dollar is vulnerable to Fed definitely and to dollar. And still, if we go with a scan on monthly chart, we can see that monthly low is very, very close. Okay, it's very, very close. And our previous low was 62. Yes, it was 62. And if this level is broken, definitely we will go to parity, and we can even proceed to 0.87. Yes, so this level will be important. You don't have a lot of support out there. Don't have a lot of support. You have this support here. Okay, then you have lower levels here. Okay, like this. And then it's basically a free fall towards 0.8. So for bulls and for potential, I can say now moment bullish market, price definitely needs to stay above 0.462. As I say, if it breaks, the price will inevitably go down. That is what I think on euro. I cannot say, guys, now what will happen exactly, because our analysis and predictions are for the day and for the week. So anything can happen. But major level is definitely a previous low, which is 0.4620. So that is very major level. And definitely pay attention to it. Strong level. 1 point, this is, I will mark it down more precisely. I will take this bearish order block here, which is 1.1040. So 1.1040. Okay, this is, okay, I missed it. Let me check again. 1.0104. Yes, I type it. Let me do it again. 0.1040. 0.1040. Okay, so this is the next level. If 0.462 breaks, this is next level to watch from a mid-term perspective. And lower levels, as we said, 0.100, and in between, of course, below that is 0.85. So this zone here. But I don't expect to happen anytime very, very soon. First, we need to see ECB reaction. Because today we saw news that Mr. Novotny from a European Central Bank said that they can also rate hikes and so on. Now that is just blah blah until the real results happen. But until then, guys, pay attention to these levels, because euro dollar is prone on mid-term and long-term trend to go down. Australian dollar is still, I can say, you see, on monthly time, this is bullish on monthly time, but it's too big of a time frame. So on daily time frame, it's still bearish. Daily time frame shows a potential M pattern, which can lead us definitely to M5. So my opinion about Australian dollar is that if 70.15 breaks, if 70.15 breaks to the downside, this is M, and we should see L5, which stands at 0.6950. So this is mid-term perspective. Mid-term perspective is telling us that Australian dollar could break 70.15, but only if it breaks and daily candle closes below it, it should be a cue for the price to go to 69.50. I cannot say what will happen because latest comments from President of Reserve Bank of Australia were that basically he was very happy with the Australian dollar around 0.7550. So 75.50 is the upper threshold now at this point according to fundamental views. And you can see here that the price is really in between this range. We can see that price is ranging in between 69 and 75. This range can stay for some time, but also don't forget that on daily we can see now a rising channel. So this could be a rising channel towards 75 again. So it's a bit uncertain, and even now we can see that it's a sort of megaphone here. So yeah, it's better to say it's megaphone, not a rising channel, although this is a rising, but you can see it here. It's a bullish in a sense, but the range is huge. So in this way, I can say that Australian dollar could bounce from this spot again towards higher levels. But it's still in a range mode on daily chart. This is not so good to trade the midterm because price is making a slow grind and definitely not what I like to see. Definitely not, guys. This is, if you ask me, something which can be definitely hard to trade on higher time frames and hard to trade on midterm. Definitely, guys. Now, considering another perspective from our midterm view, we can say that from a chart perspective, dollar yen is particularly interesting to me. Now I will explain why it's interesting. Especially it's interesting because on monthly time frame, you see, do you know the name of this pattern, guys? Do you know how we call it? And this could be basically a start of a new, even bigger trend. Okay, yes, Claudio, you're right. This is cup and handle, indeed. Indeed, guys. But pay attention to other, maybe I didn't express myself correctly. This is indeed cup and handle because at this price here, we had a handle, right? This was a handle here. Okay, so this was a handle. But also, guys, look at this. Why it's interesting for me. If it breaks this one here, what it will be then? Does anyone know to tell me? What will it turn to be if it breaks this high? Can someone tell me what pattern we will have when the high is broken, the high of this candle? Indeed, Marco was, no, Apostolos, you were completely wrong. Marco was the fastest and the most precise. It's a ascending scallop, ascending scallop, indeed. Ascending scallop is J-shaped pattern, J letter in English. It's a J-shaped pattern, and if it happens, guys, we can see huge bounce toward 140, indeed, even bigger. So this could be a start of ascending scallop in dollar yen, where it could reach even historical highs, even bigger than 140. I would even dare to say 145, 46. So yes, this could be ascending scallop. okay, like J letter here, bank. That is why it's important to watch for near-term high, which is 125.85. Okay, I will mark it down. Because if this high is broken, that will be, of course, in between we will have drops, we will have bounces and so on, but that could be a sign for another wave of buyer. On monthly time frame, that will be bullish. Now, first target then would be definitely the height of this one, because if this top rejects after the scallop has been formed, this is double top, 133, okay, this is the price, it's 133.90. I will place it a little bit better. Yes, it's definitely not like, let me check once more. No, it's 135. Yeah, I see that something is wrong. 135. Definitely 135. Now, if this is touched, it could be another rejection towards lower lines where it will turn out to be inverted head and shoulders. So pay attention to 125 break, and then if we remember this webinar, maybe we will remember that I mentioned that this level could be touched, okay? 135, 10 or 00. It could reject again towards this spot here. But guys, this is monthly, so it can happen in a year or couple of years. So it could be that next year is very bullish for dollar yen, okay? But pay attention to the possible break and to 135 if it's touched, to see if the price will proceed up or it will start to make a left shoulder on monthly. It takes too much time. Now we are talking about years, right? But because a single candle monthly time frame is a full month, 12 candles equal to year of trading, year of price action. So it will take a lot of years. It will take many years, guys. So please pay attention first to 125.85, then you will see what will happen, but I guess it will go up. Australian dollar, we talked about it. What was the question? Kiwi, New Zealand dollar, yes. New Zealand dollar. New Zealand dollar is still, let's see, a weekly time frame. See, it's pretty much bullish on weekly if we consider a latest price action. It's bearish overall, but you see here we have a first swing formed, and we can even draw a good trend line here. It's a steep trend line, but it tells us that basically Kiwi has started a retracement on weekly time frame. So retracement on weekly time frame has started while we see a general downtrend. Now if we use a Fibonacci retracement tool from this point here, or let's say previous high because it has a confluence with EMA. This was previous high, this was order block here, breakout, okay. Good level, definitely. You can see that the price is trying to reach the top of it. I don't know if it will be successful, but it's trying to aim for 69.00. Okay? Yes, it is indeed inverted head and shoulders variant. And that is why I'm saying it tries to reach 69.00. If it breaks 69.00, it will be also in a confluence with H5, which is very close, and probably it will try to go towards 70 and 72. But it could happen only if this 69 is broken. So from New Zealand dollar perspective, pay attention to a possible break of 69, guys. Pay attention to it. It could be a wedge developing indeed, but also, guys, this is a right shoulder. This is a right shoulder. So we need to be fast with these guys. Okay, so yes, 69, 69.10 levels. Watch out for it. It could happen, and if it breaks, okay, exactly the level is, yeah, 69. If it breaks 69, it could go testing first 69.50, then towards 70 and 72. So pay attention to this. Dollar CAD and pound yen, and we need to finish. Definitely this pair has been broken, has been breaking all important levels of resistance. It's not infinity, because in the history we can see which level it's trying to reach. Okay, so this obviously that dollar CAD now, because 38.50 has been broken, next level is double top on monthly chart, guys. I'm talking now about monthly chart, which is 49.50. Okay, 49.50 is probably next level, but on monthly chart, guys, I'm talking. Okay, it will take time probably, but if something happens which could be related to oil price, the trend will change. But for this moment, look at this. This is W. This is W bullish pattern, and when this price was broken here, nothing less could have been expected from the pair. 30.62 was the top. It was broken, and look at this. Now it's trying to reach the first interim resistance, which is very, very close, and next, let's say double top, or almost a double top here, exactly at 41.95. So this could be the temporary resistance, 41.95. It's bullish, and it's related to dollar CAD. You need to know that dollar CAD is defined by commodity prices, because Canada is rich in commodities, China growth, employment rate, emerging market, domestic currencies, and I said in my prediction that 38.50 would be hard to break. Yes, 38.50 rejected the price for 100 pips, but then suddenly the price, bang, went heavily to the upside again. So it could be that near to midterm 41 will be reached. 42, 1.42. And pound yen finally, and we can call it. And for, of course, near-term movements, guys, don't forget to sign for a session recap on Monday. We had good euro-dollar trade last week. So pound yen, yes, pound yen, guys, is going up, and this is really a heavy uptrend. From potential perspective on weekly time frame, we need to draw a equidistant channel. We cannot be very precise because this is definitely, I will do it again, and I need to take this movement into account. So let's draw it correctly. Okay, this is enough. We have a lot of touches in this channel, yes. So guys, first of all, we can see that pound yen is following weekly channel. This was a breakout. Now from weekly perspective, this was a false breakout. The price went back in a channel, then another false breakout, and now this was held by the equidistant channel. Now, very important level for pound yen is L4. L4 has a good confluence with the bottom of equidistant channel. If this was a temporary bottom here, it shows us that only if the price closes below 182.11, we can expect a downward movement. Okay, so this is what you should watch, 182.11. On weekly time frame, it's an X cross with equidistant, not an X cross, but the confluence with the equidistant channel low and L4. So this low, if it's broken to the downside, the price will probably continue to test L5, and we should move this lower channel again. Until you see a bigger retracement on weekly, you cannot say that the price will indeed be rejected towards the top of the channel. This is, guys, weekly, and trades on weekly and setups can take a lot of time to develop. Okay, so this could break to the downside, but then pay attention to 180.60 and to this spot, which will probably make a confluence around 100, 130, and 160. So from a midterm perspective, this is bearish on weekly time frame. On daily time frame, we see that the situation is clear. It's bearish because it's below H3 pivot point and below EMA 89. So still bearish. It's trying to bounce, but it's bearish. I don't know. Dominicus is asking me about uptrend. I cannot say anything about uptrend because now we are talking about forecast. The forecast is really bearish. The uptrend will start as soon as the price breaks L3 and tries to go to test pivot at H3, because in between these two lines, this is a range. If it breaks L3, there is a higher range. So that could be on lower time frames. That could signify an uptrend. But guys, I'm mentioning it intentionally. Lower time frames. Okay, I hope that this helped, and we will see what will happen. Lo is saying, thank you guys for all these years being together. You're the greatest helpers. Thank you, Lo. Definitely, we appreciate it. And we are here, as you know, we are here to help you. And do not forget that we have another session recap, live trading rooms with Chris, and we will finish this year being in profit, hopefully, as always. Thank you, guys. Expect us soon. We wish you a very good weekend ahead. Cheers, and as always, trade safe.